Hello?
Hello?
Hello, can you hear me?
Yes, Etonam, I can hear you.
Okay, great. So sorry, I think I had some challenges.
Don't worry. As for technology, it can happen to all of us.
Right. So I think we can start.
Great, no problem.
Alright. All right. So welcome everybody. We are thrilled to have you join us for another exciting episode of the HR Digest. The HR Digest is a great learning platform powered by Sedat Consult, your trusted and number one partner for all your HR solutions. Over the next hour, we will discuss employee deductions, what the law says. The HR Digest is designed not just to inform, but to engage. We want to create a platform where information can flow both ways. So please do feel free in the chat box, our cherished followers, and drop your name, your location, your thoughts on today's topic, and ask questions. Please do feel free to ask questions. We would have dedicated moments within this episode and address all your questions accordingly. My name is Etonam Kovi, your host for today's episode, and we are pleased to have Mr. Stephen 𝐀𝐝𝐦𝐢𝐬𝐬𝐢𝐬𝐬𝐬𝐻, a lead consult with Bluewell Consult. Before joining Bluewell Consult, Mr. 𝐀𝐻𝐸𝐻𝐸 worked with the National Labour Commission for almost 14 years, where he was the head of department for the Greater Accra region. He is well equipped as he has teaching experience on our labor laws, our employment laws here in Ghana. And as we try to navigate what the law says on employment deductions on this episode, this session would help us understand the legal requirements, which are very essential for us as HR professionals. And it will bring on board up-to-date knowledge on the law's mandates on all the deductions we have here, helping us ensure compliance at our workplaces and foster a foundation of trust for our organization. Mr. 𝐀𝐻𝐸𝐻𝐸𝐸, we are grateful you could join us today, and we're hoping to have an insightful session with you. Personally, I've experienced some of your law classes and they have been insightful. And I know
Nice to meet
we are
you,
in safe
Etonam.
hands. I know we are in safe hands with regards to everything law on this session. You're most welcome, and we are grateful that you could
Thank
join
you.
us today.
Thank you for having me. I know that this is a conversation we've been waiting to have in quite a long time now, but your schedule, my schedule, has made it pretty difficult. But I think today is a date set in the start. So I'm happy to be here, and I'm hopeful that within the next hour we can share knowledge on the topic that borders on deductions within the employment relationship. Get to resolve some of the little challenges we may be experiencing as HR people, and to become better practitioners and to be able to make our employees happy. In the end, that's the primary goal.
Thank you very, very much. To our followers who just joined us, this is the HR Digest, and today we are discussing the topic employee deductions, what the law says, and we have Honorable Mr. Stephen 𝐀𝐝𝐦𝐢𝐬𝐬𝐢𝐨 taking us right into the topic. So starting off, Mr. Kisi, would love to know what the mandatory deductions for all employees in Ghana are, what the mandatory deductions are, and what the law has to say on the deductions we have here in Ghana.
Okay. So to begin with, one of the things that we will need to all understand is that deductions in general are backed by law. And so once you find yourself in an employment relationship, whether as the employer or as an employee or a worker, you should know that there would come a point in your employment relationship from your very first day of work, for which at determined period, certain deductions are going to be made from the earnings that you make. And so we need to understand, like I said earlier, that these things are backed by law. And so in Ghana, when we're talking about deductions, let's not forget that as HR people, our go-to legal regime to guide us is the labor law, number one, particularly section 69 and 70. There's also the Income Tax Act of 2015, which is also known as the Act 896, which largely borders on income tax earnings and how it is regulated in Ghana. And then there's also the Pensions Act of 2008, Act 766, where you would find you find a three-tier contribution system that has been developed by law. And so this would allow you to do, it will actually give you the mandate for which you can exercise any form of deductions. Now, to best appreciate the question Etonam just asked in terms of the mandatory statutory deductions, per Ghanaian law, we would find that when it comes to these mandatory deductions, it's your income tax or the pay as you earn tax. There's also your contribution to SNIT, and also a portion of your SNIT also goes into the National Health Insurance Levy. And so you would find that for every Ghanaian worker, depending, and I'm sure that sometime down there we'll get to know at what rate will I qualify or be exempted from paying tax on my earnings. But you would also have to understand that these earnings, like I mentioned, are regulated by the Income Tax Act, the Labor Act, and also the Pensions Act. So these largely, because they are statutes, it means that it beholds on every other person who falls within that particular bracket. The law compels you to act in that manner. So the law will compel you to pay tax. That's why it's mandatory. So it's the pay as you earn tax, the SNIT, and also NHIL. These largely are the mandatory statutory deduction regimes that we have in Ghana.
Okay, thank you very much. So, as Mr. 𝐀𝐝𝐸𝐬𝐢𝐬𝐢𝐸𝐬𝐬 said, the deductions are backed by law, and it is upon us as professionals and employers to be up to date with the knowledge that is embedded in our laws. He did mention the labor law, section 69 and 70, the Pensions Act, income tax, pay as you earn, NHIL. Thank you, Mr. 𝐀𝐝𝐸𝐬𝐢𝐬𝐢𝐸𝐬𝐬, for your insights on that. So, our next question we would love to have you answer would be, how are employee contributions to SNIT calculated? You did mention that we have the Pensions Acts regulating contributions to our pensions. So would love to know what the law says on the contributions and how it's calculated for our employees to.
Okay. So as HR people, one of the key obligations we owe to our staff is the payment of pension benefits or retirement benefits for our working staff, so that when they go on retirement, they can live life on those earnings. And so you would find that when it comes to an employee's social security contribution, the law under the Pensions Act mandates the employee or the worker to contribute 5.5% of his basic salary or her basic salary. And then the employer is also mandated to contribute 13% of the worker's basic salary. And then those two components come together. That will get, we're looking at 18.5% of your basic salary for every month. That would go into your SNIT. And so you would find that a portion of that 13% that the employer is supposed to contribute in your name or for your benefit, 2.5% of it goes to the NHIS, which is the National Health Insurance Scheme, so that we can keep the national policy of health insurance running for all Ghanaians. And so that's if you're looking at the basis for which we can calculate your SNIT, for you as the employee, it is 5.5% of your basic salary. The employer is mandated by law to also contribute to your benefit 13% of your basic. And like I said, 2.5 out of that 13 is paid to the NHIS, and then the remaining is invested by SNIT in various investment portfolios like real estate, the hospitality industry, landed properties, stuff like that. So that's how the calculation is done. 5.5% on the employee side, 13% on the employer side. And all of this is calculated on your basic salary. We need to make that clear. It's on your basic salary.
On basic salary. Okay. So 18.5% of your basic salary in total serves as a contribution to SNIT. Okay. Yep. So you did mention income tax. And we would like to know what the minimum amount is for deduction for income tax, please.
Okay. So I think earlier on I mentioned I discussed in brief what the legal regime for these deductions are. And so when it comes to income tax, like I mentioned, the Income Tax Act becomes the go-to law that we use to make these deductions. Now, the law has been in such a way that there's a certain minimum threshold that once you go above and beyond it, then it means that you are supposed to pay income tax on your earnings. Now, you would find that this particular threshold is determined by the Ghana Revenue Authority. And so currently, if you earn less than 366 cedis a month, yes, I think it's 360 cedis a month. So when your salary per every month is 366 cedis or less, it means that you are exempted from paying income tax on that particular earning. That's the threshold that has been set out by the Ghana Revenue Authority. Now, any earnings above 366 cedis is subject to tax. So if you earn 361, 362, all the way to 1 million cedis or more in Ghana, then that earning is subject to tax. However, our tax is set up in such a way that these tax obligations that you would owe the state as an employee is progressive in nature. So depending on the bracket you find yourself, then the tax component that is placed on your earnings. So if you're earning about 366 to, let's say, 800 cedis or 1,000 cedis, there's a certain percentage of tax that you pay. If you're earning beyond 1,000 cedis to maybe 3,000, or between 4,000 to maybe 8,000, all of these things are set out in the act. So once you pick the act, you are guided by the percentage that you have to put the employee in, and then you do your tax component of the basic salary, and then you told that, and then you pay to the GRA on the 15th of every new month. So that's the threshold that has been set. So if you're earning more than 366 cedis, then know that that's who you are going to pay tax on it. But if your salary is less than 366 cedis, then the law is saying that for that kind of amount, you are exempted from paying tax. It doesn't mean HR people, we should start paying our people 366 cedis because we don't want them to pay tax. No, let's pay people more if we can. That's just it. Just that once we are paying them more, it means that their obligations in terms of tax to the state also is also progressive in nature, depending on the band that you fall within.
Right. So we shouldn't pay our employees less than 366 just because we don't want to pay income tax. Yes. We should pay them what due them, but know which threshold we will be paying certain percentages on as income
Exactly.
tax.
Exactly.
Right. So, in the organization, we have some voluntary deductions, right, for health insurance, other retirement plans. Is it, can the employees opt out on these voluntary deductions, or they would really have to fall in line because HR says they are doing this for them? So, everybody will, because we've spoken about the mandatory deductions earlier, and most of the time these voluntary deductions don't fall under these the mandatory ones. So can the employees opt out, or they would have to fall in line just because policy says so?
Okay. So yes, an employee can actually opt out of any form of voluntary deduction, so long as from its if from its beginning, the consent of the employee was obtained before the deduction started. So because it's voluntary, then you cannot necessarily say that we are tying you to it because you're supposed to be there. By the operations of what a voluntary act is, then it means that any person at any point can elect to get out of it or stay out of it. And so you would find that because these voluntary deductions are not necessarily mandated by law in itself, that is where the employee can wake up in the morning and say, okay, I do not want to be a part of this anymore. So stop doing any form of deductions in that manner. So you would find that let's say I'm in a union, I'm a unionized staff, and then for some reason I decide to opt out of the union. It means that those voluntary deductions that were being made from my basic salary to the union would have to come to an end, or it will have to cease. The same way, if let's say I am a part of we have a welfare scheme being operated within the enterprise, and I say that I do not want to be a part of that welfare, that's voluntary in nature. And so it means that once I say I don't want to be a part of it, then it means that that would also come to an end. Or let's even say we have a credit union operating within the enterprise, and maybe I may have taken some credit facility and has actually completed the payment of those facilities, and it means that those deductions ideally cannot continue, or maybe midway through the payment of the facility I'm able to secure some funds and just do a one-time payment, then it means that I can actually opt out of that particular voluntary deduction, as was the initial arrangement.
Okay. So speaking about the voluntary deductions, are there any limits on the amounts that can be deducted by the employer towards these voluntary benefits?
Okay, so you would find that the our labor law provides that whatever deduction you intend to make out of an employee's earnings should not go above 50% of the employee's total earnings in every given month. And so you would find that, let's say I earn like 2,000 cedis. It means that the total deductions, whether statutory or voluntary, that can be taken from that 2,000 cedis is 50% of it, which is 1,000 cedis. Now let's do some small maths here. I am supposed to contribute SNIT, right? So 5.5%, all of those deductions are made. It comes up to like, let's say 600 out of that 1,000 is for my statutory deductions. The outstanding amount that I have for which voluntary deductions can be made from would be from the remaining 400 cedis and not the 1,400 cedis that is remaining. So that's the threshold. Now, the whole idea is to make sure that the deductions that happens on your basic earnings do not make life living difficult for you as an employee or as a worker. And so the law says that, yes, you can do it either by statute or voluntarily, but it should not exceed 50%. There may be circumstances where between the employer and the worker, they can agree that, okay, you know what, let's do a little above the 50%. But these things must always be consented to by both parties. But then again, you ask yourself, if we're doing that, how are you going to cope in the ensuing months? And that's why the law says, go ahead and do all of that, but do not go beyond 50% of the employee's basic earnings, so that whatever standard of living they are used to, they are not made worse of, but they can actually just maintain the standard until the deductions have come to an end. So that's the threshold that the law imposes on these deductions. It should not be more than 50% of your total in a month. Yes.
Okay, so we are guided by the law not to deduct about 50% of their earnings when it comes to the voluntary deductions. All right, we'll love to go into our chat box now to see if we have some questions in there or to connect with some of our followers here. So we have Ifwa Japan. We are grateful to have you, sir. We are grateful to have you here on the HR Digest, Ifwa. We have Evans Coffee. It's $4.90. That is tax-free. So I want to believe he is talking about the income tax we spoke about earlier. Evans is stating here that it's $490. That is tax-free. Maybe we can speak on that as we go on. Then we have Joe Matt Ansong. Okay, so Joe has a question as well. So maybe I can merge his with Evans' statement and then we can address that after I read Joe's question. Please, so Joe's question is, please, what if the employee earns allowance of 1,000? I want to believe it's 1,000 Ghana cedis, not salary. So what if the employee earns allowance of 1,000 Ghana cedis, not salary? Should tax be paid on that allowance? Mr.
Okay.
Kisi. Yes,
So
please.
allowances are also taxable. Now, before you get to the element where you have to tax the allowance, you would have to do the initial, when it comes to contributions to SNIT, those, like I mentioned, are made on your basic salary. Now, where you are earning certain allowances, the Income Tax Act has certain provisions that would allow you to pay tax on some allowances and then exempt you from tax on other allowances. And so, depending on the nature of allowance that you are earning, like I said earlier, you may be subject to some tax, but it will not be necessarily the ones that we are used to. As for your basic, the income tax, we'll still take it, but we will take it after we have added your allowances and all of that, and then we will look at how we can take out the tax element. So you would find that for us to be able to know the nature of tax you have to pay, there's what we call your unemployment total cash emolument. It's a combination of your basic salary plus every other tax that you earn. And then once we put that together, we do some workings to arrive at what constitutes your chargeable income. Now, it's based on that income that tax will be taken from. Because you see, like I mentioned, let's say you have an aged dependency, you are entitled to some aged dependency allowance by law. It means that person should be a parent and it should be 60 and above. And you get like 1,000 cedis for the whole year. If you have two parents, it's so 1,000 cedis per each parent. Now, what that means is that for that particular instance, if you're earning that kind of allowance, it means that we are not going to tax But let's say you are given a gift in the course of doing your job. Somebody gives you, now there's a gift tax. Depending on the value that is placed on that particular gift, you're supposed to pay taxes on it. So the tax that is placed on certain allowances are specific. If we give you a car, if we give you a driver, and we give you fuel, your total tax, the tax element goes up to 12.5%. So we're looking at 5% for the car, 5% for the fuel, 2.5 for the driver. If we're giving you accommodation, it is not furnished, the tax element is different. If we're giving you a furnished accommodation, the tax element is different. If it is shared accommodation, it is also different. But where we give you accommodation on site. Let's say we are into agriculture or mining or construction, and we give you accommodation on site. Because we are depriving you of the normal comfort of your home, the law says that in that particular circumstance, those ones are not taxable. So to answer our question, it depends on the kind of allowance you're getting and whether it has a direct link with the job you're doing, or it is not a direct link to the job that you're doing. And then the Income Tax Act regime gives you the formula that you would use to compute the tax on those earnings. So that's how it's done. And yes, so
Okay.
it's actually 490 now. As at 2024, it's been reviewed from 366 to 490.
Okay. All right. So the review has been done. As at 2024, the amount is 490 Ghana cedis. That is tax free after 490 Ghana cedis. So if you're earning 491, the thresholds would be applied depending on how much you earn, right? Keep your questions coming in, keep your suggestions coming in, keep your comments coming in, and would love to engage with you and address them as we go along. This is the HR Digest, and we are discussing employee deductions, what the law says. And we have Mr. Stephen Osei-Kisi taking us through this session. So we have Zachary Salamat saying, I'm enjoying the conversation. Good afternoon. Good afternoon, Zachary. We're glad you're able to join us. Elizabeth Amponsa says, interesting discussion going on. Thank you very much, Elizabeth. And we have Mr. Osei-Kisi to thank for great insights being shared here. And we have a question from Jonathan, which says, please, does the labor law, I want to believe it is the labor law, please, does the labor law permit deductions for misconduct at the workplace? Mr. Osei-Kisi, a question from Jonathan. Does the labor law permit deductions for misconduct at the
Okay, so one of the things that HR people must come to understand is this. The law actually prohibits you from imposing any form of financial burden or financial liability on an employee's salary. So this is what the law actually says, that an employer shall not impose a pecuniary penalty upon a worker for any cause whatsoever. That in plain language means that if I misconduct myself at the workplace, you are supposed to use policy to find some other way of imposing a sanction on me, but not my earnings, not my salary. So you would find that under section 69, the law is clear on what is prohibited. Then section 70 talks about permissible or permitted deductions. So section 69 says that it is actually prohibited, or you are not allowed to impose any pecuniary penalty. And pecuniary penalty here is financial penalty on an employee's earnings for whatever reason. So the law is saying that we actually do not care whether the person has misconducted himself, or he has fought at work, or he has been absent from work. do not touch his salary. That's what the law says. But when you come to section 70, then you are allowed certain grounds for which you can actually by law deduct. We've spoken about some already. SNAIT, Provident Fund, welfare scheme. Maybe you have joined some gym membership, association membership, whether old students, all of those things that we find ourselves engaging. Some of the ladies, when they say, oh, me, I like to visit this particular spa, maybe every 2 weeks or every month. And so deduct this much and pay to the spa. That's permitted. Or maybe we have given you a company laptop or a company mobile phone or even a company vehicle to use. And then touch wood, you get involved in an accident. And the police says that the accident is as a result of your negligence. Then the law is saying that the employer is at will to actually make you pay or deduct from your earnings to more or less put the car back in shape. Those ones will be permitted because there is grounds that have established your negligence. But what the law is saying that you cannot do is that under 69, you cannot impose a financial burden on an employee's earnings for any reason. It also says that you're not supposed to, I'm trying to read it so that we are all clear. The B69B will tell you that you shall not deduct from an employee's remuneration any amount unless the deduction is permitted under section 70. And like I said, section 70 will give you a tall list of permissible deductions, SNAIT, association membership, all of those things that we have mentioned. If I look at Etonam's hair, it means that she probably may tell her employer that, okay, you know what, because I like to wear these things literally every 2 months, then this particular place, I can't do advert for any of the hair people, even though I know a lot in my head. So maybe this particular beauty shop is where I buy from. So every 2 months, take a portion of my salary and pay to them. So that when I go there, it's not that I'm now going to ask, how much is this? I pick and go because they know that my payments are recurring. They keep coming. So there's no issue there. So section 69, section 70 should be our guide when it comes to what we are allowed to do in terms of deducting or not deducting from an employee's earning. And as HR people, we can forget a number of things. But when it comes to deductions, section 69 and 70 is something that we should not forget.
All right. I tell myself most of the time, the labor law should be the Labor Act should be our Bible. And when it comes to deductions, Mr. 𝐀𝐝𝐦𝐢𝐬𝐬𝐢𝐨 has rightly stated that Section 69 and 70 should be our guiding principles on the grounds for deductions. Jonathan, I believe your question has been answered. We have a question from Victoria. What about loss of goods? Can an employee be surcharged with the cost?
Okay, so like I said, before you can say we're going to surcharge you for the loss of goods, it must be premised on something. You don't say that because the goods have been lost automatically, the employee is the one to be held responsible. If there are circumstances that go beyond the employee's control, it would be unfair to actually label the employee and say it is your fault and therefore pay for it. So let's say I drive a company van and I'm supposed to give some purchase goods to a client. And then on the way, the car is attacked by armed robbers. And the police do their investigations and they come out and say, well, it cannot be the driver's fault because it was an armed robbery. The driver could not have done anything about it. That particular employee would not be liable for the loss of that goods. But where the investigations say that this particular employee is complicit in this particular act, then as HR, you have every right to make these deductions from the employee. Now, you cannot on your own decide that somebody is complicit unless you have conducted an investigation. And that's something that a lot of the time, HR people, sometimes we are so much in a hurry to sanction that we forget some of these procedures. Natural justice, it should never be lost on an HR person. Whatever it is that you do, natural justice must prevail. So there is loss of goods before we can say that it is a particular employee's fault. Natural justice must be seen to be at play, to allow the person a chance to come and defend themselves. And do not be a judge in your. Sometimes HR is the one issuing the query, HR is on the disciplinary committee, HR is on the review committee, HR is the one signing the sanction. No. The person might have done the act, but because you are a part of it from the beginning till the very end, then it would defeat one leg of natural justice. And if the person takes up the issue elsewhere, it would defeat whatever it is that we have done. So yes, you can actually charge, but before you charge, be sure that you have done your investigations and you are 100% sure that it is true that this person has done it, or there's a police report that is saying that this person is complicit or was more or less facilitated the loss of your goods. And on that circumstance, you can do more than just deduct. Somebody will say, I don't want you to lose your job, so you work. But whilst you are working, you will pay for what has been lost, and then I'll be taking it from your salaries in bits, but not more than, as we have already mentioned, not more than the employee's 50% of total earnings in a month.
Okay, all right. So, Victoria, like he said, you can be surcharged, but it is up to us as HR professionals to do our due diligence and investigate to have proof that the employee is liable for the charges and must be guided on the voluntary deductions of not more than 50% on the deductions. Thank you very much. So Zachary Salamat has a question which goes, what happened if the employee is suspended? Zachary, if you can let us know exactly what you'd want us to know on deductions when it comes to suspensions, then Mr. 𝐀𝐝𝐬𝐢𝐬𝐬𝐢𝐸 can address it fully. But Jonathan says, thank you very much for the response. I really appreciate the response. Thank you, Jonathan. And then Victoria also says, thank you for the response. All right. So we would love to hear from you. So we're waiting for more questions, more contributions, more insights from you, our followers, as Mr. 𝐀𝐝𝐬𝐢𝐬𝐢𝐸𝐬𝐢 takes us through what the law says on employee deductions. This is the HR Digest brought to you by Sedat Consult this and every Sunday from 4 p.m. to 5 p.m. And today we are discussing employee deductions, what the law says. All right, Mr. 𝐀𝐝𝐬𝐢𝐬𝐢𝐸𝐬𝐢, I'd love us to look at errors on deductions. Human as we are, we tend to make some errors here and there. But then what would be the procedure to correct some of the errors we make with our employee deductions?
Okay, so largely these things they are policy guided. So most of the time we'll fall back on what our policy says in the event where some deduction has been made in error. Now, away from policy, you would also find that even if we don't have a policy existing, we can employ other means of dealing with errors in deduction. And so you would find that one of these processes would mean that, number one, we should be able to identify the nature of the error in itself. Okay, so what's the kind of error that has occurred? Is it in relation to maybe some allowance or maybe some association dues or remittance? So we must first find out the nature of the error, or maybe it has to even do with payroll deductions. Now, once we identify it, then we go ahead, we do the next step by investigating the error. What has actually led to its occurrence? Is it a systemic issue? Is it by way of human error? Maybe when we were key, we forgot 10, or we forgot to add some allowance, or we took out an allowance that we were supposed to add. So we identify, we investigate, and then we take the step of communicating to the employee. A lot of the time when these things happen, we are quiet on it as HR people. But trust me, the way the system make, everybody is keeping a key eye on every detail that goes on their pay slips. So they would know. So once they either notify you or you see early enough, if you see first as an HR person, notify the person that, okay, we have identified X, Y, and Z, which we think is in error. Because a lot of the time, if we overpay, we are quick to tell the employee we overpaid you. But when we underpaid, yeah, then it's like we have forgotten, then we are scratching our heads like it didn't even happen. It should not be so. So we should just keep the principle. When we overpay and we are quick to act, when we underpay, we should also be quick to act. So we identify, we investigate, and then we communicate. Now, away from these three, then we take steps to correct it as well. So in our communication, we can let you know, okay, this is what we have seen. There's been this particular underpayment. Trust that account will work on it, and in 2 weeks you will get it. Or in the ensuing month, it will be added to your earnings. So we communicate, and then we correct it. And we look at documentation as well. We should document the processes from the point that we identified to the corrective measures that were imposed or were conducted up until the communication that was made to the employee. We must document it. HR people, one of our issue is that we don't like documentation. Oh, menena, so it should be okay. Trust me, it is not all the time that we can rely on the fact that we've had conversations, and so that should be enough. Sometimes I encourage HR people that even when we have these casual conversations regarding these issues, probably premised on maybe error in deduction, keep a small diary in your office and just note that, okay, so on this date, I sat down with Eto now to discuss the error in deduction of X, Y, and Z, and we agreed on these things. And then you just do some small notes and then you sign it off. It's to help you to be able to look back and look at what you have done verbally. That's one way of even documenting our verbal activities. But when we leave it to the four corners of the four walls of our offices, trust me, the employee can say, "I don't remember we had this conversation. Where next?" So yes, documentation is important, and then we take steps to prevent. Yeah, we get it. It's a human institution. Errors are bound to happen. But the ones that can be avoided, why not? We work towards avoiding those ones. And then we also make sure that whatever deductions, whether they were made in error or from a good place, it must be compliant with the law. And I have said that Section 69, Section 70 should be your go-to, just where you're asking yourself, okay, for this particular thing, can I deduct or not deduct? Pick the labor law and look at Section 69 and 70. It will guide you, and then you will be able to, avoid making these errors.
Okay, so Mr. Ose-Kisi has stressed on one thing as professionals we must do and do properly all the time is documentation and clearly communicating on the errors and taking action to rectify the errors with our deductions in accordance to section 69 and 70. Thank you very much, Mr. Ose-Kisi, for taking us through deduction errors when it comes to employee deductions with regards to the law. All right, so Salamat is back to help us understand her question. So she was asking what happens when the employee goes on is suspended, what happens to the mandatory deductions that we mentioned earlier? That is her question to you.
Okay. So one of the things we must appreciate is that suspension is in itself is a punishment or it's a sanction. So that you are suspended doesn't mean that that particular month will not pay your SNET contributions. We have to pay. The Pensions Act does not give you a segregation on pay employees in good standing their SNET, those in bad standing do not pay. No. The law says that once the person is an employee, you are mandated to. So where the person has committed or has breached company policy, and for which the sanction is that the person must be suspended, it does not amount to a negation of the mandatory contributions that are supposed to be made for the benefit of that employee. Because if you don't pay, then it means that what you have done is double jeopardy, i.e., you have punished the person twice for the same offense, and that's not something that is guaranteed, or that's not something that the law blesses. And so that you're on suspension doesn't mean that you lose the mandate actions will not go through. They would still go through.
All right. So, Salamat, as Mr. 𝐀𝐝𝐦𝐢𝐬𝐬𝐢𝐨𝐧 rightly said, suspension alone is enough sanction to the individual. Having the deductions done would be classified as double jeopardy, and you may not be in compliance with the laws. So, Salamat, your question answered by Mr. 𝐀𝐝𝐦𝐢𝐬𝐬𝐢𝐨𝐧. All right, so we have Insuraba. And the question goes, what if the employee's contract states that the employee would be paid for the number of days worked, even though there's a basic salary? Thus, the basic salary is not fixed. What happens to the deductions based on the terms stated in the contract?
Okay, so a contract like that would mean that the benefits you earn your salary when you appear at work. So literally the contract is set out in such a way that you are marked by the day. And so it means that whatever it is that is supposed to come to you at the end of the month is dependent on your being there on each particular day for you to be marked. So you would find that where you don't meet the threshold for a particular month, it means that those deductions will not go because it is exempt from the tax. However, if it has to do with pension, whether the person is meeting the threshold or not, it's mandatory that these payments go. And so you would find that the 5.5% from the employee's salary, the 30% of what would have been the normal earnings is still contributed. Or what SNIT will also advise you to do is that whatever the earnings are for a by day worker, then it means that for that person, you pay as is required. So if the person is supposed to report 22 or 23 or 25 working days to get a full month of pay, but is marked by the day, and the person shows up for 20 working days out of the 25 or out of the 27 or out of the 22, then you pay as according to those number of days so that the person's future is not affected. But if the threshold falls under the 490, then it means that income tax will not come in. But the earnings in respect of pensions must still go through. So you would have to still pay, the employee will still have to pay for those deductions must be made for the employee's pension.
Okay, Shuraba, I believe your question has been duly answered by Mr. 𝐀𝐝𝐦𝐢𝐬𝐬𝐢𝐨𝐧. All right. So, Mr. Kisi, when it comes to record keeping, how long must employees' deduction records be retained, and what information do we include in the deduction records?
Okay, so it would depend on the organization. Now you would find that there are certain entities where record keeping is set out in such a way that every 5 years they archive their records. In some other places, it's every 10 years. Then it goes into archive. So those are the things that the policy guides them to do. Now, in the general sense, there is no strict timeline on how long you can keep these things. And so you find that these days, what people are doing is employing electronic ways of keeping up with these records, so that when it's in the cloud, it's in the cloud. It will never go away. So these days, a lot of employers are spending money on cloud services just so that they can do away with the paperwork. And some also have made the argument that it goes into supporting this whole agenda of the world going green, where we do less of paper and more of technology and more of cloud services. So there's no, like I said, there's no strict timeline. It has to be dependent on what the organization considers to be a best fit for its operations. So if 5 years we go into archives, then that is what it would mean. If 10 years it goes away, that is what it would mean. But no proper functioning establishment would want to see a total wipe out of its information. No, these records are supposed to be kept in a way so that they can serve as a guide for future events, and also give us a room for which we can operate in such a way as to prevent the earlier errors that we encountered whilst when they occurred. So those are some of the nuances. You would have to do it premised on the business requirements and what the employer considers to be an ideal way of managing information. That's how best these things are handled with. Or you just throw it under policy and say, well, policy requirements when it comes to these things will be premised on when it occurs, we keep the information for 10 years and then it goes off, or we keep it for 5 years and then it goes off. So it's more dependent on the employer and also guided by policy.
Okay, so guided by the employer and the policy. All right, going into our chat box, we have Esther 𝐀𝐝𝐦𝐢𝐬𝐬𝐢𝐬𝐬𝐬𝐬 just joined today, but enjoying the show. So educative. Thank you, Esther. We are grateful you have been able to join us on the HR Digest, brought to you by Sedat Consult. Sorry. And we have a question from Sims P. Please, is the new labor law in force? Still, say
Okay, so it is still a draft. It has not been passed by Parliament yet, and so what that would mean is that Act 651 is still the law, the labor law that all of us are still using until Parliament passes it into law, and then the president signs it off by assenting to it, and then it becomes an effective law. But until that process is completed, it remains a draft.
Okay. All right. So Evans Kwabena Kofi, a follow-up to his question. So deducting them is wrong. I'm trying to draw the question but the comments that follows it is because most companies divide the employee's basic salary by number of working days in order to get their daily mark. When it happened, they multiplied the number of suspensions by that rate and deducted from the salary. Please help me understand this more. So I want to believe this is based on the question on the suspension, deductions during suspension. So he wants to find out, because most companies divide the employee's basic salary by the number of working days in order to get their total daily mark. When it happens, they multiply the number of suspension days by that rate and deducts from the salary. Please help me understand this more. All right, so Mr. Kofi wants to understand the dynamics around deducting when an employee has to go on suspension?
Okay, so I think this question we've answered earlier by saying that um, under Section 69, you cannot impose a financial penalty on an employee's earning for any reason whatsoever. So if that is what is being done, then I just want to humbly suggest that they find other ways of dealing with the, for whatever reason that is leading to the suspensions, but do not take away from the employees' earnings because they have been suspended. The law frowns on it. If that employee puts you before any court in Ghana, before the Labor Commission, you would have questions to answer because your action is a breach of Section 69 of the Labor Act. And where you have breached the law will not actually be bothered about your reasons for the breach. It would sanction. It would, in that circumstance, you would more or less be asked to refund whatever deductions that you have made against the said employee. So, like I said, our policies should be able to guide us to deal with situations that will resort to making the difficult decision of suspending an employee, so that we find other ways of sanctioning the employee. So we sanction you, but it should be devoid of anything that relates to your earnings. The law frowns on that. The law doesn't give room for that unless it is permitted under Section 70. Anything outside of Section 70 is against the labor law.
Okay, Mr. Kofi, we hope you've gotten some clarity on the dynamics you shared with us. All right, Mr. Elsays Kisi, in your own words, some take home we can take away from this session as we try to wrap up with today's session. If there are any other dynamics in the law that should be brought to our attention with regards to deductions and every other thing that the laws governing deductions may have, if you can bring to light in summary as a take home for all of us from this session.
Okay, so I think that one of the key areas for which a lot of the time we would find HR people, being dragged before maybe the Labor Commission, or being put before, like the company being put before an adjudicating authority, is because some of these things have been done outside of the provisions that the law actually requires of us to do. And so, as a take home point, all I would say when it comes to employee deductions is this. Number one, as HR people, let's know the legal regime that guides these things, so that we do not find our actions going outside of the provisions of law. Number two, I have mentioned that the Labor Act, the Income Tax Act, the Pensions Act should be something that as HR people we should just try and read and know what the statute requirements are of us when it comes to making deductions at the workplace. Now, where these things are present, then it means that we are safe. We can conduct our actions in such a way that we don't have to look over our shoulder to see if GRA is coming or the employee is going to take some further step in respect of an error in deduction. And so, and again, we must also take advantage of the kind of network that we build. No HR person knows it all. And so for me, I always say that your network is something that you can always rely on. So you can always find out from a colleague HR, Chairman, how do you treat this? Oh, Madam, Charlie, how is this thing done? And I know a lot of HR people who would be willing to share knowledge to make life easy for you as an HR person. So once we are able to do that, then we know that we have done a good job. So let's know the legal regimes. Let's try and educate ourselves on what the regimes are, and also take advantage of our network, so that in the conduct of our daily business as HR people, we are able to find the more or less navigate our way through the little nuances that most of the time become pose as a bigger challenge down the hill. That would actually be my take home.
Okay, great take homes. Let us know the legal regimes. Let us know our acts like the back of our hands, the Labor Act, Income Tax Act, Pension Act, and our network. Let us build our network, and that is why we have the HR Digest and Setup Consult providing this platform for us to connect as HR practitioners to learn and to grow in our practice this and every Sunday. So stay connected, connect with everybody you've been able to reach out to on this platform. And everybody here would be willing to help you. This is the HR Digest brought to you by Sedat Consult. And we have been discussing the topic employee deductions, what the law says. And we were guided through this episode by Mr. Stephen 𝐀𝐝𝐦𝐢𝐬𝐬𝐢𝐨, the lead consult for Blue Well Consults. Hitherto, he spent almost 14 years with the National Labour Commission and held the position of head of regional secretariats, Greater Accra region, between 2010 to 2024. His experience and classroom experience and total experience with the labor law and other acts that govern our employment is what gives him the wealth of knowledge that he's been able to share some insights with us. We are grateful to you all who found time today to join us to learn. I'm sure most of you saw me jotting down a lot of things. I have learned a lot of things, and I believe you have also learned a lot of things. And we want to say thank you, Mr. 𝐀𝐝𝐻𝐾𝐶, for sharing these wonderful insights with us. And I believe we can always fall back on you through the Sedat Consult platform for any further assistance or questions or thoughts on employee deductions, what the law says. Benjamin says insightful. Okay, so there's a last question here. There's a before we go.
Okay, let's take the last question and then
The last
we go.
question. Insightful. Okay, thank you, Benjamin. Indeed, it has been an insightful session. Please, what category of personnel must employers pay their tax and SNITs?
What
Which
category of personnel,
of
or which
personnel
category
must
of personnel?
which category of personnel must employers pay their tax and SNITs?
Every employee. So the law
Okay.
is clear. The law doesn't set out a segregation that don't pay
Okay.
don't pay tax for casual workers, but pay for temporary workers or for contract workers or for permanent workers. The law only mentions a worker. So irrespective of your category, you are still subject to tax.
Okay, so Benjamin, every category of employees, every category of personnel must pay their tax and SNIT contributions. Thank you very much to everybody who found time to join. For those of us who engaged us in the chat box, we are really grateful. You've made this session an interactive session, and we are grateful for your contributions and questions. So until next week, when we come up with another great episode, we wish you all the best for the week ahead. May we go forth and be great HR professionals this week. Thank you very much.
Thank you.